Welcome everyone, a super duper evening to all of you. I hope you have gone through all my last videos. I'm sure you will get a very good value out of those videos. So today's topic going to be a very interesting topic. It's regarding investment. There are a lot of people facing a problem where when they invest their hard-earned money, at the end of the investment they lose their money, because there are five rules which you have to keep in your mind whenever you save your money or invest your hard-earned money. So let's get into the topic to understand what are those five rules of investment or savings which you have to keep in your mind whenever you make your investment. So the first investment rule is save. So what does this save means? So whenever you invest or save your money, your hard-earned money, the first one is you have to make sure wherever you are investing, that is safe. You are investing into a some instrument where your money, at least whatever the principal amount, is safe. So, for example, if I have seen a lot of investors or people who invest their money in such instruments where people, any uh, either I will not say bankers or any the outsiders or any of their relatives come and say you can invest in this and you can give it to me. I will double that amount in 1 year or 2 years. Be careful with those kind of people because you will lose your hard-earned money. Make sure wherever you are investing, you have a knowledge of or basic level knowledge of those instruments. If you are investing into any of the stocks, make sure you know a basic understanding about those stocks, any of the shares. For example, you are investing your money into Infosys shares. Make sure you know their basic financial strength of the company. What is why are you investing? What is the what if the investment to Infosys is not facing a good value for you? So all these things you have to keep in your mind whenever you make a decision of investment. Okay. So the basic, the golden statement here I'm going to say is be the informed investor. Don't be the prejudiced investor. Have a basic education before you're investing in that. So that's all about the first rule called safe. So let's get into the second rule, which is again a very important rule, is have a goal. So what is the meaning of have a goal? Whenever you are investing or saving your money, that should be tagged to a particular goal. That means if you don't know what is goal and how are you going to set your goal, so there is a video before this where I have clearly explained what is goal and how are you going to set your goal. So there are two types of goal: short-term goal and long-term goal. So make sure you are, investing into particular goal. For example, goals can be, your kids' education, your kids' marriage, or you want to buy a house, or you want to build a house, or you want to purchase a new car. These all are the examples of goals, and you have to divide that into a short term or long term or anything. Immediate to 3 years is a short term goal, and anything beyond 3 years is a long term goal. So based on this goal you have to decide about what instrument you are going to invest, whether it's a mutual fund, whether it's a bond, or whether it's a fixed deposit, anything. But make sure Whenever you are investing into a particular instrument that is tagged to a goal. So that's all about the second rule called have a goal. So the third rule is don't let your savings become cold. So what is the main reason behind this rule is there are a lot of people whenever they invest their hard-earned money to any instrument and they forget it. Never ever do that. You have to at least track your investment and look at your investment, review those investment at least for a quarterly time. So because you don't know the time when you decided to invest that instrument that might be doing good, and when it after 3 months or after a particular year that might not be doing good. So if that is the case, you have to review it and change it if required. So never ever forget your investment where you have invested. Wherever you are invested, make sure you are reviewing it for at least, if not monthly wise, at least 3 months wise, quarterly wise. You are looking into it so that your savings or investment will not become a cold. Okay, so that's all the meaning of the third rule called don't let your savings or investment become cold. So let's get into the fourth rule. So the fourth rule is don't spend it. Very important rule this is because whenever you are investing, as I told you, that is tagged to a particular goal. So if it is tagged to a particular goal, you can't spend that amount of money to anything else, and you have to use only for that goal, so that your your aim is reached or your goal is reached, so that you can live a beautiful life. So if you are spending whatever the investment amount before or anywhere in between, so then you will lose the real meaning of investment and you will not become wealthy. Okay. So always you have to have a mindset whenever you are investing into some instruments that should be tagged to a goal, and you at any cost, whatever it may happen, you will not going to spend it to anything else other than that goal. So that's all about the fourth rule called don't spend it. So what is the fifth rule? Okay, so the fifth rule is versatility or diversification. So the versatility or diversification means, you know, you have to mitigate your risk. So wherever you are investing, there is some or other level of risk attached to it. There is no instrument without any risk. So make sure you are not investing into only one instrument. For example, if you are investing into one share or one stock, then that means you know your risk is very high. What if something happens to that company or that organization? Then entire share price will come down and you will lose all your money. Always make sure you will keep percentage amount in each of the instruments. For example, if you are into a particular life stage, there is a there is a rule. You have to invest this much amount of money only to debt instruments, and there are some amount of percentage will go to the equities, where again in equity there are different stocks, different industries, and again come into mutual funds, gold. So make your asset management in such a way you are mitigating your risk, and your investment has a diversification. Okay, so this is what the fifth rule: versatility and diversification. So recapping this, so there are five goals or five rules of investment. One is safe, second one is have a goal, third one is don't let your savings or investment become cold, And the fourth one is don't spend it, and the last one is versatility and always have a diversification in your investment. So this is what about 5 rules, and I'm guaranteeing you, if you follow these rules whenever you are saving your money and you are investing in your hard-earned money, you will definitely, you know, be success in your investment, and you will definitely reach your goal and live a happy life with full of happiness, and you will become financially freedom very early. Okay. So if you are the one who like this and you have taken notes from this, I hope you have taken some notes from this topic and this video. Please post your comments below this video so that at least I understood you have gone through this video and understood some value I have provided. And if you have not subscribed yet to my channel, please subscribe. And if you want to connect with me, there is a link below of the description of this video where you can, you know, there is a Google form where you can enter all the details. It will not take not even take 2 minutes of your time. Fill that Google form, submit it, and then you can have a 30 minutes free one-on-one with me where you can explain me what is your situation. I will give my level best to provide you a solution to overcome that problem. I hope you meet. I hope you to meet in one-on-one session. So let's meet again. Till then,